welcome to my more important analysis videos on Wednesday 25th of October with me, Richard Perry, market analyst at Hantec Markets. We've got a fairly interesting outlook to the markets actually. It's a bit of a consolidation going on, but there is an underlying dollar strength, I think, running through these markets. But you can see here that there's not a great deal of direction. Euro's fairly flat. We've got the ECB tomorrow, and that I think is weighing on forex traders' minds at the moment. But generally speaking, the dollar is sort of mildly stronger across these forex majors. The Aussie dollar is weaker on weaker than or lower than expected Aussie inflation. And sterling, incidentally, has just had the benefit of better than expected GDP first read for Q3. So generally speaking, the dollar is stronger and it is pulling high. It continues to move towards this 94.14. Well, you'd sort of confirm above 94.26, but certainly this is rallying towards a point at which this could be a big head and shoulders reversal pattern, so watch out for that. But that drive higher is coming through these treasury yields, isn't it? Look at that treasury yield moving through on the 10-year above 2.4 big figure. That has been a level that has been holding the market back for the last sort of 5 or so months. It's broken out now above that May high. And it certainly looks as though the market is pulling on the treasury yields considerably stronger, and that is coming not only on the 10-year but also the 2-year. And that's coming with suggestion that Donald Trump had a lunch meeting with Republicans yesterday, and they sort of did a straw poll on which of the choices for Fed chair they preferred, and it seemed as though that John Taylor was the preferred option coming out from the Republicans, and he's the more hawkish choice for that. So that would be one of the reasons why the front end certainly is pushing out strongly higher, and that is helping also the sort of longer dated yields as well to pull higher. So some key moves on the dollar there, such is continuing to make gains, but the ECB is a reason why the euro is not coming under that selling pressure quite yet. So equity markets around the flat line, really mixed, but slightly underperforming as we sort of move in on the DAX and the FTSE. But interesting that Wall Street gained fairly well on economic data. On earnings yesterday from 3M and Caterpillar. The disproportionate improvement in the DAX, 0.7 versus 0.2 for the S&P 500. That is due to the way that the Dow is calculated. Being a price-weighted index, and 3M and Caterpillar both being high-priced stocks, therefore their relative weighting is much higher. That takes me to my chart of the... Oh, no, sorry, it doesn't. The economic data today is durable goods. We've had as I said, the UK GDP data this morning, better than expected. Q3 0.4% and 1.5% on the year on year. But market will be looking out for durable goods for the US. Now, ex-transport is the data that we look for, and that's expected to be 0.5% on the month-on-month data. So it's mildly better than last month at 0.2. Then we're also looking at the Bank of Canada monetary policy decision, expected to be no change at 1.00 on the rates decision. However, it could well be that the Bank of Canada sort of improves its outlook for growth going forward, and it'll be interesting to see how the market reacts to that. New home sales, 0.56 million units, 560,000 units. So basically no change really on last month. Then the EIA crude oil inventories, 2.5 million barrels of drawdown, distillates 0.5 million barrels of drawdown, and gasoline 1 million barrels of drawdown, all expected. So that will be a driver of the oil price this afternoon. But my chart today is the dollar Swissy. Now we have seen dollar Swissy moving quite sharply higher. The euro is basically consolidating in front of the ECB, but the Swissy has broken out, and it's confirmed that base pattern 97.70. Big breakout above that, and forming this big base pattern that gives you around about 330 ticks if you measure it from the 94 94.40 low that we saw back in July. You sort of measure the depth of that base pattern, project it higher. That actually gives you pretty much bang on 101, which were those April-May highs. Now, parity is certainly a key level that the market will be looking out for. 99.50 as well has historically been a key pivot. Look at the number of times 99.50 provided resistance back in 2016, and then subsequently a bit of a pivot through 2017. So we could see that coming back in as a level that the market looks out for, but parity is certainly on the minds of traders. And look at the momentum indicators. The RSI 69, that is the highest on the RSI that we've seen since November 2015. MACD lines, bull kiss, and pulling higher, and also the stochastics as well. So buying into weakness on this dollar Swissy certainly seems to be the idea. 98.50 will be a breakout level as well. That old support became new resistance. So breaking out above that becomes supportive again. You've got this uptrend as well, so anywhere around 98.50 I think is a buying opportunity. You've got the hourly chart which reflects this as well. Any unwind towards sort of 40 to 50 seems to be bought into. MACD line's mildly rolling over, so you could see a bit of a drift potentially in the very near term. But old support becoming new resistance. Look at that old resistance becoming new support, 98.30. Having been resistance through the early part of October, became supportive in the last couple of days and breaking out. So we've also got 98.80, old resistance became new support. Again, another level to look out for. So some good moves on the dollar Swiss there. So buying into weakness is the way to play that. So I wish you good luck in your trading, and I'll speak to you later. Thank you.